Mansukhani, Managing Director at Man Industries, joining us this afternoon. Nikhil, firstly, thank you so much for joining us at very short notice. Those numbers looked good, Nikhil, except maybe the top line. I'll come to the margins though. What surprised on the margins, and are these margins sustainable?
So, hi, good afternoon. Yeah, so the
Very good afternoon.
numbers are good. Like you said, the top line margin for the year, FI, so we are not quarterly to be viewed at quarters. The overall guidance which was given by us was around 3,700 crores for the year, and still we stand by it. The Q4, we have a great amount of sales and shipments which are going up. So we would be matching that. The bottom line numbers which are very important, which we've been guiding since some time, that we would be getting it to an average 12-13%. And we've been working towards that. And now you see that kind of an achievement. Q on Q, yes, it is on the higher side because we are obviously executing a lot of projects which are pipes, coating, and specialty coatings. So we are getting more margins currently. But yeah, we try and we will entail to continue at least the 13.1 year on year from now onwards. And that's what we are working towards.
Okay, your margins have in fact come in at 15%. Talk to us, Nikhil, about what's led to that margin uptake in Q3. I know you don't look at it quarter on quarter, but even Q2 was better than your guided number. So I'm trying to understand whether there's an upside surprise to that margin number.
No, I think there is better efficiency. We have been trying to improve our operations versus cost versus even our power consumptions. Plus, also a lot of the business currently we are executing are also further value added. We are getting more businesses and like we are doing the bare pipes, the coatings, the bending. So we are getting the entire gambit of the order. So we are able to draw out further more margins.
Okay. Nikhil, you had guided for 20% growth in FY26, if I'm not wrong. That takes your top line to 4,200 crore, if I'm not wrong. You just mentioned 3,600 crore as the top line. Correct me if I'm wrong.
3,700 crores standalone. Last year we did the real estate sale, which was around 370 crores, so which got added. So last year standalone was around 3,130 crores. So we would be around 36 to 3,700 crores this year, which would be approximately 20% of growth on the standalone basis.
Understood. How much of real estate do you own and how quickly does it get divested, Nikhil?
So real estate in Man Industries, we had this one company called Marino Shelters, in which we did the sale last year. And we've got certain amount of percentage of share of revenue of that now. And now that the project will be probably, with all the permissions with RERA and everything, should be launched sometime first week of March. Once that starts, then that kind of revenue of around 6 to 700 crores will come over the next 6-7 years as the project gets completed.
Okay, and that's revenue that goes straight to profitability, or there's a cost associated with that revenue?
There's no cost associated with that. It's profitability.
Perfect.
Basically.
Understood. Talk to us about Q4, therefore. Does Saudi Jammu also start adding up starting Q4 itself? Is that something which one can pencil in? And in that case, your top line should be well ahead of 1,200 crore, right? Because the 1,200 crore number is something you clocked Q4 last year. So ideally, it should be much more than that.
Yes. So no, the Saudi and Jammu will not be clocked or any revenue in FY26. Both the revenues will start in FY27. The top line, like you said, 1,200 crores was last year. We should be more or less probably a little above that. I would like to guide and hopefully over-deliver. That is the right thing to do. So give or take, these are the numbers that we should be achieving. And, the growth which we've suggested at 20-25%, we would be achieving that for this year as well. FY27, both the companies will be operational, the COD, and you will start seeing the revenue of the Saudi as well as the Jammu, clocking in from there.
And 1st April, Nikhil, how confident are you that from 1st April, this will start getting clocked? Because 7,000 is a tall ask, right? To do that, you'll have to go right off the bat. I'm trying to understand whether it's Q2 or it's Q1 itself.
Partly from Q1. I think Saudi, we will be able to achieve some parts from Q1. I think SS will be from Q2. But yeah, it's a tall ask, and so yeah, we're gonna work towards it, and let's see how much we can push and get there.
And does the otherwise the revenue breakup remain the same? 2,000 from Saudi, 500 from Jammu, and 4,500 from India, rest of India rather. Is that the way in which in crore, for viewer perspective, in crore in terms of top line, is that how it'll play out?
Yeah, give or take. I think Jammu 500 first year would be slightly optimistic. So I think it would be giving or take, like probably Jammu would be 300, then, the 200 would be going to Saudi Arabia. India would be around 15-20% growth from where we end up this year. So give or take, those are the numbers, we should be achieving. And I think we have more space in Saudi to push it up if we are able to get some orders and execute it, quickly. We may be able to push a little bit there, and we will. So give or take, these would be the numbers. Yes.
Right. And Nikhil, Saudi is better margins for you. You've spoken about that. Jammu is also better margins for you because the product is a better margin product. And you're already doing maybe 14% margin, if I understand right, for 9 months, FY26.
Yeah.
Would you therefore care to hike the kind of margin guidance you've given for FY27, given the scale that you'll achieve?
Uh, Not really. All the times we do not get such value-added projects. A lot of times you have a multiple bag of projects when you take, and all projects don't yield you sometimes 17%, sometimes 11, 12%, and an average of 13 to 14%. I think this is what we've been trying to achieve. I think consistently to achieve 13 to 14% is our goal first. And then once we have a couple of years of consistency from there, then we are going to obviously work towards pushing it further to north, 2-3%. So I think 13 to 15% guidance is pretty much correct for FY27.
Okay. All right. I would take that positively because 13% is what I had read as part of your guidance. Now,
Yeah.
Nikhil, when I'm looking at the top line of 7,000 crore, I'm trying to understand whether this is a tall ask for you. Your order book is at 4,700 crore. Please pardon me if I've not looked at the latest PPT because it would have just come out while this show is going on. But talk to us about how confident are you of achieving that, and what's the bid pipeline, which is roughly 15,000 crore. How quickly can you convert that? What's the conversion rate? What gives you the confidence?
So currently the order book is at approximately 4,000 crores. Bid book is at around 11 and a half, 12,000 crores. And we are working on certain projects. Certain projects we've already bid, and we are hopeful that we should get those. And I'm slightly, like we don't feel any issues because Saudi, this is our business. We've been doing it for 35 years. That's why Saudi, like we said, that there are a lot of orders. We are working on them quite aggressively, and we are hopeful that we'll be able to probably get Saudi up and running and get the numbers also up and running quite quickly. Stainless steel, obviously, it's slightly new to us, and that's why we are being more cautious. Though I don't think the numbers achieving should be tall task, but we should want to be more cautious towards that. And achieving from India growth of around 15 to 20% should not be an issue because of the order book. So I think we should be, given the guidance, we should be somewhere around, 20% growth India and overall once the numbers kick in from Saudi and Jammu.
Okay. And what's the sense, Nikhil? What can I get out of you with regard to why doesn't EBITDA convert to cash flow? That's one part of it. And what do you do with the cash flow that comes through now? Do you start to repay debt? What's the next step with regard? You've done all your capex, so I'm trying to understand what next with regard to the cash flow coming in.
Yeah, so obviously the free cash flows will go towards the repayment, the quarterly and the yearly repayments towards the loan taken, so that obviously the debt levels keep going down. And obviously the real estate will further help in it because it's not got any cost to it. So whatever cash flows that keep coming in will be repaid towards the debt to get the debt level down. Currently, I think there is around December ending, there was around 500 crores cash in the company. And now that all the expenses are going on for the capex, I think the first phase is to get both the capexes online. get the business. And once the businesses are online and the cash flow is free cash flows keep coming in, we're going to start repaying as and when required.
Okay, all right. Thank you so much, Nikhil. This has been very good trying to get a perspective of how things are playing out. And again, thank you so much for coming at very short notice.